Hello, this is Rajiv Avasti, broker associate with Intero Real Estate Services, and you're welcome to my Real Estate Minute today. If you watched my previous shows, we talk about anything and everything related to real estate. Today, we're going to address real estate investment, 1031 exchanges, specifically directed to the first-time investor and to the savvy investor. So today, I have the distinct pleasure of having Mr. Karl Worden, who is a tax deferral consultant, a financial advisor, and a real estate investor for many, many years. So Karl, welcome to the show.
Thanks for having me.
So Karl, people talk about investing, they talk about investing in stocks versus real estate. Can you shed some light on the differences, the pros and cons on both of the investments?
Yeah, it's funny. I just recently had a conversation with a lady and her husband, and they were talking about investing some money. But she has a distinct interest in investing in real estate, so she was asking my opinion. And I said to her, well, let me give you an example. As a financial advisor, if I'm doing my job, I'm getting you or averaging for you a 10% average annual rate of return. That's if I'm doing a good job, okay? So you give me $100,000 and we invest it 10%, $10,000 at the end of the year. I've done my job. On the other hand, if you find a good piece of real estate, cash flowing piece of real estate, perhaps using your services, I would assume.
Sure, I would assume so.
And you buy wisely, and you invest this $100,000 into a $500,000 piece of property, or 20% down, and that $500,000 piece of property appreciates by a mere 4%. Okay, that's a $20,000 increase in price. Okay, so your equity, which was $100,000, is now $120,000. So if you do the math, that's a 20% rate of return.
And not to forget that you make a positive cash flow during the 1 or 2 years that you hold the property, versus not making anything.
You should always plan on buying smart, buying with a positive cash flow, no question.
Great. So now, what is a 1031 exchange? People might want to know, and what are the timelines, if you can shed some light on that?
Yeah, so investors that are in the game and they're building their real estate portfolio. Let's say you bought that $500,000 piece of property a number of years ago, and today it's worth $900,000. Well, if you're trying to grow your portfolio, obviously maybe you want to grow and get a bigger property, maybe more cash flow, et cetera, get into commercial, whatnot. You sell that property, you pay the taxes on the $400,000 to buy a new property. That could be problematic. I mean, you could lose upwards of 20 to 50% of your gains to Uncle Sam. On the other hand, if you use what's called a 1031 exchange, and I do represent Exchange Solutions of 1031 Exchange Accommodator. Basically what we do is at the point of sale, we jump in and we take the cash, not you, right? You do, it's taxable. If we take it, it's not, but you got to follow certain rules. You have 45 days to identify replacement property. You have 180 days to both identify and close on the replacement property. The new property must be equal or higher in value, and it must be like kind, which simply means you sold an investment property, you bought another property for investment purposes.
Yeah.
And those are the basic rules.
Fantastic. And then there's a second category of people who are savvy real estate investors who've invested in real estate for many years, have done some 1031 exchanges in the past, and created a lot of wealth for themselves. Now comes a time in their life that they want to consolidate everything and simplify their life. What would you recommend to those kind of investors?
Yeah, so a lot of people think they're stuck with the 1031, they have to sell the property, they have to buy another one. That's actually not the case. There's a multitude of different options. In fact, they're even applicable. The 1031 is for investment purposes, investment properties only. There's actually a number of different strategies that are applicable to investment property, primary residence, and second home. So if you're stuck in a property, or if you feel like you're stuck, you're not. There's actually exit strategies for you to be able to sell and cash out. Deferred sales trust, opportunity zones, conservation easements, Delaware steps. I could go on and on and on. If you want to know more, you can go to my site and you can talk about it.
Absolutely. I think there's a cool website. Everybody ought to go there if you're thinking of investing in real estate or you are a current real estate investor. It's www.defertax.com. That's DEFER tax.com, one word. Use the access code DANVILLE, all lowercase, DANVILLE. You'll see a lot of cool, short, animated videos that'll shed a lot of light on the conversation that we've had today. Karl, thank you for coming, and I know we've come together on a lot of our shows, on my radio show as well. If you guys ever tune in, Radio Zindagi 1170 AM, 9 to 10 every Monday morning. Thank you for being on the show today, and catch you on the next one.